Hey everybody, this is Ryan Mallory and we're going to be talking about gold. Should you be buying it? Which stocks should you buy? Should you just buy the ETF straight up? The gold ETF has held up pretty well this year. It's up 13.1% against the S&P 500, which is down 9%. The NASDAQ, which is flat. That's a surprise. The Russell, which is down almost like 19%. Yeah, it's doing pretty good. Gold is doing phenomenal. So how does it trade? Because a lot of people think that when the market goes to crap, gold's going to shoot through the roof. Like it's this like recession-proof entity. It's not. In fact, when you start to see the really heavy selling in the market, that's when you start to see gold crater. Usually it'll hold up for a while, but then once everything starts to hit the fan, that's when gold starts to take the tumble. Why? Because people get margin calls. When their stocks are performing really bad, when they're leveraged, they get margin calls. What are they going to do to raise cash? They're going to sell their gold positions, and that's what you see all the time. Back in March, when the stocks were falling apart, what did gold do? It went straight down. And then it started to bottom out before the market did, and it went straight back up with the market. And for the last 3 weeks, it's been trading sideways. It gives you the feeling that there's going to be another move getting ready to be made. Is it going to be higher or is it going to be lower? Let's talk about that now. Depending on the type of trader or investor you are, it's going to determine the approach that you take with gold. As a trader, you can see here over the last 3 weeks, you got a little bit of a triangle coiling pattern there. If it breaks to the upside, you want to play that break higher. However, if you're looking for value, you're probably better off, especially with there being so much uncertainty with the coronavirus, with the lockdown, with the economy just not even back on its feet yet. Yes, we've had an incredible rally of late, but there's still the potential for a huge sell-off going forward, especially if the reopening of the economy doesn't go according to plan. So if you're looking to get into GLD on a pullback, there's 3 levels, and we have to look at those levels using the weekly chart. So the first one is this white line here. This is the most likely scenario here, and one that would probably still be a pretty good value. It'd be a pullback in GLD from about 161.73 all the way back down to this 136 level. If it can do that, that would probably be a good area. You can see it's tested it multiple times. This is a support level that goes all the way back to 2014. But an even better support level, and this assumes that the S&P 500 is likely to pull back to its lows, break those lows, and establish new lows that beyond what we saw in March. If that happens, then this purple line right here, that would be your best entry to the long side. Now this orange line, I think this is kind of the, oh crap, what just happened in our economy? What just happened? We just completely crashed way beyond anything that we saw back in March. Then this orange line becomes a potential entry price for you on GLD. May not happen, okay? Good chance it doesn't happen, but it's a possibility. So those are your 3 levels that I would watch for an entry if you're looking to invest for the long term in GLD. If you're looking to trade, well then the daily chart's your friend and you want to play this breakout of the coil here. Now, a lot of people are talking about silver because, hey, silver's cheaper, right? It's like, hey, I can buy more ounces of silver than I can ounces of gold, so a lot of people flock to it. Guys, I don't know. I'm not really liking this. I mean, you have this huge topping pattern going all the way back to August of last year. You have like a double top pattern there. It confirmed the double top. Absolutely fell apart going from the 17s in February all the way down to the 10s in March. That's some pretty heavy selling. You're talking about over a 40% decline in your investment there. That's not good, okay? But you do have a little bit of an opportunity here. You have a triangle pattern here. It's bounced off the lows substantially, about 40% or so. But you have this 50-day moving average lingering overhead. So I would wait for it to break out of the coil and above the 50-day moving average. If it does that, then you have limited upside here, because where I think this thing's going to run into trouble, and you pull up the weekly chart, this double topping pattern here that's so well defined, it's gonna run into resistance at 1544. So is there really a good risk reward there? Not really, because you have about $1.20 of upside, and then if you want a logical stop loss, it's about 80 cents below. So I don't, it's not even a 2-for-1. I wouldn't do it, okay? It's about 1.5 to 1. Now let's take a look at the gold miners here. First one up, biggest one, Newmont Corporation. This thing has taken an incredible run higher. It's almost up 100%. Is that one that you really want to be investing in the long term for? No, there's probably a good chance it's going to see a pullback here, just like the broader market's going to see a pullback. But again, for the trader, for the swing trader, there may be still more upside. You may still see a move from $62 to $70 if this market can hold up, if the gold ETF can hold up as well. So you have this bull flag here. It's forming perfectly. Where I put my stop loss probably around $57, $56, and then see if you can't get a move beyond $70 at this point, because it does make some huge moves. You can see here it broke above some resistance at 52. Within 3 days, it's trading at 61. So if we can get a similar move where it goes from about 62 to maybe $70, $72, that could be a really good trade setup. If you want a tighter stop loss, then I would just probably put it below this bull flag pattern here, and be putting it also below the 5 and the 10-day moving averages too, which should provide a little bit of extra support along the way. Now, what about the long-term picture of Newmont? Is it worth getting into at this level here? I don't think it is at this point. Reason why, we've gone from about 32 all the way up to 62. Again, that's almost a double in price. You're better off waiting for a good pullback in this name, especially with the market being overextended. Where I would target is this level right here. You can see it's a huge long-term support level. It goes all the way back to 2018. And it's held very well over the past few years. And you can even see there was a lot of choppiness right at that level during the March pullback. So what I would want is a pullback to the $41, $42 level in Newmont before I would consider a long-term investment on that particular trade. Now, in terms of swing trades, I think Barrett Gold is probably a better swing trading play than even Newmont. Yes, Newmont's run like crazy, but so is gold. It's gone up more than 100% off of its lows, but it also has this really nice channel that has formed, and it's pulled back to the bottom channel, and it's done so on light volume. It's a bull flag pattern, and it looks like it might actually push back up to like the $30, $31 level. Now, if you're looking for an investment long-term, what I would probably do with GOLD is wait for a pullback to this rising trend line off of your 2015 lows. And if it does that, it can pull back to this $14 level. I think that would be the better risk-reward opportunity from a long-term investment. Again, may not see that for years to come. I don't know. I can't predict the future. But if it does, that might be a really good play to get into from a risk-reward standpoint. All right, let's take a look at AEM. Agnico Eagle Mines. Did I say that right? I'm not sure, okay? I butcher a lot of words up. Don't hold it against me. However, I'm just going to call it AEM here. AEM, I'm going to stay away from it. Why? It's got a bearish wedge. Now, if the gold miners, they keep going up, gold keeps going up, it'll probably drag AEM with it too. However, I don't think it's the best risk-reward trade. I think if it doesn't work out, there's a huge downside to it here. And I think it could accelerate very fast because this is a bearish wedge pattern. It's not parallel channels like what we saw with GOLD. That's the kind of stuff that you want to see. I don't like to see the channels coming in tighter. That's not a good sign to me. So I would go ahead and stay away from this one. Plus, you got a ton of resistance at this level here at 62. You don't want that kind of resistance trying to get in at this point in time. No. Move on to the next trade. You find a better risk-reward play. That's what you base it on. Royal Gold. I can actually say this one pretty good. RGLD. Look, you got a breakout that happened at 110. It's gone up from 110 at the breakout level above the 200-day moving average. It's at $130 a share now. It was as low as what, $57, $58? It's more than doubled, okay? So a lot of these gold miners, we're starting to talk about them after the fact. So the investment play, in my opinion, is becoming more of a logical option. You have a couple of plays there in GOLD and NEM, but you can't have a long-term time frame on these, especially with earnings right around the corner. And so you want to wait for a pullback on most of these. If you're going to trade them, you need to trade them with like a 3-4 day mindset maybe, but you don't want to hold these through earnings. That would be a disaster. So at RGLD, you can make the case, hey, wait for the pullback back to 110, 112 area. I'm not even sure I would do that. You know why? Because I don't like this pattern here, and I'm going to show you what I'm talking about. You have another bearish wedge, just like you had in AEM. I'm not a fan of those. I think those are ones that you see it and you say, okay, I'm going to move on. That's just not a good pattern on the charts for me to trade off of. There's a good chance it's going to cool back to 110. But then when I pull up the weekly chart, I'm not even really sure I see a viable place to get long at. I really don't. You could say, all right, hey, Ryan, if it pulls all the way back to this 93, 94 level, maybe that would be a good support level to get long on. It could be. Maybe it's like 92, 93 even. If that happens, you could maybe see a bounce off of that level. But for now, I think there's better gold mining opportunities. I think there's better gold plays out there than jumping into RGLD and the previous one, AEM. And I wouldn't get into silver either. I think there's too much resistance overhead. Very bearish chart. Stick with the gold ETF or NEM or GOLD. And when it comes to trading them, look at your trades more of like a 3 to 5 day trade, maybe only a couple days. Okay, if you get a good gains, go ahead and book them, all right? If you're looking at them from an investment standpoint, wait for the pullback. Be patient. There is a chance that you may not ever get into them for a long time, but patience always pays off at the end, and that's what you got to do with these names here. Hey, if you like this video, I'd ask you that you like and subscribe to it. It means a lot to me. It helps me to keep cranking these things out and to keep providing you good content. I'll also notify you when I actually do put a new video out there. So be sure to do that, and also leave some feedback in the comments. What do you like about what I'm saying? Do you think I'm wrong on something? Do you think I should buy something else? Do you think I'm just completely off base on gold, or do you think I'm spot on? Let me know, man. I want to hear from you. I'm trying to learn from you just like you guys are trying to learn from me. So be sure to leave your feedback in the comment section below, and I look forward to hearing from you. Thanks. God bless.